All right, everybody, what's up? It is Thursday, June 11th. Already June 11th. Man, I get depressed on June 21st. What is that? The longest day of the year. Then the days start getting shorter. But we still got a lot of summer left. Summer just began, so not even officially. So I'm happy because it's my favorite time of year. All right, big stock market correction today. I told you that was coming. And there were a number of reasons which I have been putting forth as to why that was going to happen. Now, my people, my subscribers made a lot of money today. One guy made 260% in one day. He sent me a text. Fantastic. And he doesn't play with a small amount of money. That 260%, I mean, this guy throws around big numbers. So that the 260% is a big percentage, but it was a big nominal amount too. All right, so here's the thing. I've been talking about tax flows. Very disappointing. I don't see anything right now in the tax flows that really indicate a pickup in the economy. Now, let me just qualify that and say, I think ultimately, because like I walk down the street here in New York City, and this is a big economy, New York City, and I walk down the street and most things are closed or just partially open. So we are still, a lot of the country is still under, not a lockdown, but it's still under a partial reopening, a very minimal reopening. That's number one. So I think these tax flows will eventually pick up. But right now, I've been telling you that the tax flows are really disappointing. They are shrinking. Here's the thing, another thing that I should mention, because the tax flows in the period from May 15th until now, June 10th, June 11th, those are slower than the tax flows from March 16th to June 14th. In other words, during the period of the lockdown, at least according to the tax flows, the economy was doing a little bit better than what it is right now. Now, again, this data might be lagging a little bit, even though I get it every single day. Like, my data is real time. And again, I say, if you want to learn this stuff, buy my course, Understanding the Daily Treasury Statement. Go to my website, pitbulleconomics.com. It's only 99 bucks. Educate yourself. But the tax flows have been disappointing. That has been number one, why I said the rally got ahead of itself. Number two, sentiment indicators, and for this I've been really looking at the put-call ratio, and I'm going to make some distinction between the put-call ratio, which is short-term, and something like the American Association of Individual Investors Weekly Survey, the AAII Weekly Survey. That shows individual investors are still bearish, and they haven't changed that for 16 weeks. They've been bearish. Even though we had this tremendous rally where the market went to new all-time highs, they stayed bearish. Let's set that aside for a second. That's a longer-term thing. That looks out 6 months or more. In the short term, I've been talking to the put-call ratio where we have seen extreme call buying recently. Extreme call volume. Let me correct that. Call volume. So the put call ratio was very low. Very low. It was as low as it was at the top of the market in February. Now, here's the thing. Here's the question, and this is the $64,000 question. Is this just a correction? Or is this the beginning of a second leg down to new lows in the market? Unfortunately, to find out that answer, you're going to have to sign up for a 30-day free trial of MMT Trader. Go to my website, pitbulleconomics.com, and sign up. But I will say this. I am on top of these fundamentals and these flows every single day. Remember, I'll repeat, I am the only one who has an applied approach to MMT. I take the concepts and understandings of MMT and I use that to invest and trade in the markets, and of course I give that to my subscribers. Now, I am on top of these data every single day. Every single day. I'm not waiting for data releases that are from 30 days ago or 1 quarter behind. I mean, the stuff I look at is not only real time, it's predictive. It tells you basically what conditions are going to be looking forward. That's the key. That is the key. I will say this. The correction is not over, number one. But you got to know where to buy if it is in fact a correction, or you have to know, should I stay short if this is the second leg down? That's going to be the key to making big money. Number two, I've been bearish on oil. That's come down. Number three, the dollar rally today, you sell into that. That's not going to last. The dollar rally today, you sell into that. And number four, gold. Nobody's been better on gold than me. And I'm not a gold bug. I'm not one of these crazy lunatics who think gold is money. I also don't say gold's going to go to 10,000. I don't know what level it's going to go to, but I do know that right now the fundamentals for gold are bullish. And it has nothing to do with the Fed. Yes, the Fed's policy measures affect, the zombies, as I call them, who think, they're printing money. They're printing money. But I look at gold and its own fundamentals, and I also look at the fiscal expansion. That is, by the way, that is real printing money. It's funny because these guys never talk about that, man. It's always about the Fed, and that's not, Powell himself, he said the Fed can listen to this. This is an exact quote from Powell for all you monetarist, central bank, print money folks. Powell, this is like one of the only things he ever said, which is so insightful and true. Like, I've been really hard on Powell. I've been beating him up if you've been following me, but this is like, when he said this, I'm like, holy crap. Like, this guy, I might have to have a different impression of this guy. And he said it in a cool way. He said, the Fed can lend, it cannot spend. In other words, we can lend you money, but you're going to owe it back. That is a debt. But Congress can give you money, Social Security check, unemployment insurance check, whatever, and that is yours to keep. That's real printing money. And they've been doing that. They've been doing that. A lot coming up, people. By the way, with the election, and Trump is way behind in the polls, in the important swing states, and that is where the election is decided. And the market perceives Trump as bullish. So we still have time for this, man. That's in November, but I'm just saying, the more Trump falls in the polls, the more defensive, maybe not the market, but like the dollar, for example. By the way, I am hoping, and we don't know yet, that's why you got to come on board with me. I am hoping that this correction provides an amazing opportunity to buy. I'm short, okay? My account went up today. I don't know how many people could say that, because I have short positions on. I bought SPXU. I have short positions on, plus short futures. My account value went up today, and a lot of my subscribers' account values went up today. My view of this is that at some point we buy into it. And here's another thing. I'm just going to throw this out there because I think it's funny. I think it's funny to make fun of these the very serious people of Wall Street, Stanley Druckenheimer, Jeffrey Gundlach, and all these people, they made no money on this 40% rally. And by the way, NASDAQ went to, they made no money. Freaking Druckenheimer made 3%. What is that? What do you need a guy like that for? You know why he's rich? Because he takes management fee of 2%. What is he managing? Like 14 billion? So he's making, what's 2% of that? 280, almost 300 million bucks. Then he takes a 20% return on the profits. So he made a 3%. Whoop-de-doo. So that was another 450 million. So he takes 90 million. So the guy made what? Almost 400 million from doing nothing. He made 3% on that rally. I'm telling you this right now. He's going to go short at the bottom, and then the whole thing's going to rally again. The very smart people of Wall Street. I love it. I love it. All right, everybody, go to my website. Actually, the link is right here below. pitbulleconomics.com. Sign up and get that course. I'm telling you, man. Come on, educate yourself. You know what? Commitment is like mental exercise against self-sabotage. Even if it costs you, and it's not a cost, it's an investment, but I mean, the cost in commitment, in time, in sticking with something. That is exercise to make you stronger and mentally tough. Commit yourself to something and stick with it. That's like workout for the brain. All right, everybody. See you tomorrow. Bye-bye.